Today, I'm going to be breaking down what I spend as a homeowner in downtown Chicago. I'm going to look at various costs such as the mortgage, how much I pay in insurance, as well as just all the little other costs which end up adding up as a homeowner. Conventional wisdom seems to say that owning a home is always a better idea financially than renting. So I'm going to see how well that wisdom applies to my own situation. And spoiler alert, it's not that cut and dry. In fact, it really depends on which region you're in. I'm also going to look into this in broader terms using the New York Times rent versus own calculator, which lets you see if your own city is a better place to rent or own a house. I'll also get into some alternatives such as house hacking, which can help you make even more money off of your investment if you do go the route of owning a home. So without further ado, let's start getting into the numbers. I have a 30-year mortgage on my current home, which comes to a monthly fee of around $1,450. The next thing I have to pay for is property insurance. Now, my unit is actually in a high-rise apartment building, which means my insurance rates are lower than they would be for an individual house, because I only have to actually cover within the walls of the building. Everything on the outside of the building would be covered by the homeowners association that's in charge of the building. That property insurance comes to a price of $25 a month. The next major expense with owning my home is property taxes. Now, I live in Chicago, so we do have a fairly high property tax rate, especially closer to downtown. That comes to $513 a month. Now, the next fee that I have to add on, at least this year, is the shortage amount. Now, when your mortgage company is trying to estimate how much you're going to pay in taxes each year, that's exactly what it is, an estimate. They basically try to guess how much your taxes are going to be before they actually receive a bill for it, so that you can start paying that on a monthly basis rather than getting hit by one big bill all at the same time. The problem is sometimes mortgage companies underestimate how much this is going to be, which is exactly what happened in my situation because the county I'm in raised taxes recently. This means I have to pay an extra $160 a month into escrow to catch up on all those payments which were underestimated. Now, the final fee associated with living in my building is an HOA fee. Now again, I live in a high-rise building, so this fee is actually pretty substantial because they have to pay for all the hallways, all of the area around the building, the maintenance of the outside of the building, the windows, as well as several of the utilities, including cable and internet, as well as water. This comes to a monthly fee of $900 a month. So the total recurring monthly cost for actually owning my unit is $3,048 a month. But this fails to account for some hidden costs which are associated with owning a unit versus renting. Earlier this year, one of the toilets in my unit actually flooded while I wasn't home and ended up causing water damage to around half of my unit. So this is my closet wall here, which has the bathroom directly behind it, and you can see that all the flooring's kind of been ripped out as well as all the baseboards, and the walls have been patched, but they haven't been painted yet. Now, fortunately for me, insurance covered the cost of actually fixing this. However, there were different losses associated with this, including the deductible on my insurance, as well as costs associated with the time that I lost from dealing with the issue and the lost rent from not being able to rent out the unit while everything was messed up. This was about $750, and I've lived in this unit for around 2 years, so if I divide $750 into that time, that comes out to around $32 on average per month. Additionally, I budget $100 a month for anything that might need replacing. Could be light bulbs, fixing up a little bit of paint, or just general wear and tear on the unit. When you add in these costs, the total comes to $3,180 per month. Now, if you know anything about Chicago real estate, you're probably thinking to yourself, $3,000 a month is way too much to be paying for an apartment. Those are like New York City or San Francisco prices. Even in downtown Chicago, most one-bedrooms aren't more than $1,600 to $2,000 a month, and studios could be a lot less than that. Luckily, I'm actually able to make back some of that money by renting out the different rooms in my apartment. I kind of treat this like house hacking. Now, house hacking is the idea that you would buy a multi-unit building, maybe a duplex. You would live in one side of the duplex and you would rent out the other side, and you would try to rent out the other side for the same price as the total mortgage, basically letting you live for free. My version of this is I have a 3-bedroom unit that I live in, and I live in one of the bedrooms and rent out the other 2. This allows me to make back at least some amount of what I'm spending each month. Now, the rent for the rooms actually varies a little bit depending on the time of year, and obviously it goes up over time. On average, I bring in around $2,150 in rent each month. Now, if I'm conservative and I assume that I have 1 month of vacancy per year, this would drop by a 12th, so it would be closer to $1,975 each month. The other part that you have to factor into this is the fact that I'm paying down a mortgage whenever I make these monthly payments. Now, some of that payment goes to interest, which is basically money lost to the bank, but some of it goes to paying down the principal on the loan, meaning that if I were to sell the house, I would get back that money in the form of equity. If you add in the amount of equity I'm gaining each month, that gives me around an extra $390 each month. This means when all is said and done, it costs me around $815 each month to own my apartment. This is much cheaper than it would cost me to live in the city normally, and definitely cheaper than it would be in a downtown unit like this one. The biggest downside to actually owning my unit versus renting is the additional responsibilities that I have to take on because I own the property. For example, when I had that flooding issue a couple months ago, I had to be the one to find the contractor to fix the place. I had to be the one to work with insurance to get everything figured out. So it was a big draw on my time, which if I was a renter, the landlord would have dealt with. In addition to fixing up the unit and making sure everything is maintained, I also have to act as a landlord, meaning I have to reach out and try to find potential new roommates through advertising, as well as vet them to make sure that they'll be a good fit for actually living in the same space as me. So after all that, it kind of comes down to the final question. Is owning a home worth it over renting in my situation? I think in my case, it's actually pretty close to even on whether or not buying or renting would be a better option. Sure, I'd maybe save a few $100s a month through owning rather than renting, but at the same time, I basically work an additional job in managing the unit that I live in, both through the repairs and through finding new roommates. In a way, I'm kind of just getting paid back for the effort that I'm putting in. It's definitely not free money in any sense of the word. Plus, there's a lot of money tied up in the equity of the property, which could be invested somewhere else. Additionally, one of the biggest problems with actually owning this unit have been the HOA fees. Now, because I live in a multi-unit building, the HOA has really high fees to maintain the property and make sure that the values stay high for all the units around me, which makes sense. The only downside is, because the HOA fees are almost $900 a month, it's almost like I'm paying rent to the building just to own a unit here in the first place. In the future, if I were to look for a property that was purely an investment property that I wanted to rent out, I would be very careful to look for a building that had low or no HOA fees. Additionally, HOAs can have a lot of rules which make it harder to find renters. They can charge high move-in fees, they can restrict the days in which you can move in. It just makes it a lot more hassle than if you owned your own property outright with nobody else involved. Now, from a purely financial sense, I showed that yes, owning this unit does save me more money than renting. But when I try to factor in the time value that it costs me from actually having to do the work from renting it out, the equation becomes a little more complicated. The best way to simplify this is to basically see how much would the market pay for somebody else to do the work for me. Basically, if I had a property management company doing the job for me, how much would it cost them to do what I'm doing every single month? Based on a quick Google search, it looks like property managers cost around 12% of what your monthly rental income would be. So for me, that would be 12% of $2,150, which is about $250 a month. So if I were to take my monthly costs, $850, and add on an additional $250 a month, at that point, my monthly costs are $1,065 a month. Now at this point, I'm getting really close to around the price that I would be paying for renting out a room, but I do think it's a little bit ahead of where I would be if I just had roommates and I was living in a similar area of town. The only thing that I haven't factored in thus far is the cost of keeping my money tied up in the equity of this home. Now, typically when you buy a mortgage, you have to put down 20% in order to actually take out a 30-year loan on the property. Now, in high rises, that number can be a little bit higher, so in my case, I had to put down 25% of the value of the property. Now, if I were just looking at an average market return of 9%, the amount that I save by being a homeowner might still outweigh how much I would get from renting. However, if you look at how my portfolio has done over the past year, where it's gone up 62% in just the past 6 months, there's absolutely no way the equity tied up in my home is worth it being stuck there. That money would have made me way more money if it were invested in the stock market. So in my specific case, owning was actually worse off for me than renting. But remember, I'm just one person, and what holds true for me might not hold true for other people, and it might not hold true in different regions. Now, if you look at the New York Times website, they have this great calculator which lets you look at renting versus owning in your particular city. You see, because real estate markets are so very much based on region, it's really hard to make any broad generalized statements, but you can make them a little bit more accurately on the city level. So I'm going to pull up the New York Times rent versus buy calculator and kind of walk through what it shows you. So on this calculator right here, the first thing you do is put in your home price. So let's say you just use the default home price of around $250,000. And let's say you plan to live in the property for around 5 years, which is the average for most people in the United States. Right now, mortgage rates are pretty low, so let's just leave them as the default. And let's say you put down a 20% down payment with a 30-year mortgage. So if you can rent a home for $1,072 per month or less, you will actually come out in the long run by renting rather than owning over this 5-year period. This is because you have to factor in the initial costs of buying a house, which are basically the closing costs. You have to factor in the recurring costs of owning the house, such as fixing it up, paying insurance, paying off the interest on your mortgage. And you have to factor in the opportunity cost of not having your money invested in the stock market. When you add all this up, this is how you can determine where your break-even point for renting versus buying actually is. Now, what's interesting about this calculator is it depends a little bit on how long you live in a specific property. For example, if you live in the property for just 1 year, then your initial closing costs end up making a big difference in how much rent you can pay each month. And in this case, your rent has to be almost $2,700 a month in order to make up for not owning. However, if you ended up living in this house for the full term of the mortgage for 30 years, your rent only has to be $750 a month in order for you to come out better in the long run. Now, these numbers assume you're taking a fairly passive approach to real estate investing. If you were to do something such as house hacking, or take a more active investing approach by actually managing the properties yourself, these numbers change a little bit more. For example, if in your particular city it looks like the rents are actually low enough that owning doesn't make sense, that might not be true if you're able to find a distressed property and then renovate it and flip it for a higher price. There's always ways where you can make money in real estate. It's really just a question of how much effort you're willing to put into it. That being said, I hope you enjoyed the video. If you did, make sure to leave a like. And if you want to see more videos like this in the future, make sure to subscribe. I'll see you next time.